that
New
music
Year's
not get you
resolution
charged up? What is it?
You know my New Year's resolution is going to be to not be agitated about your head being higher than mine in an intro.
Impossible. Pick something easier for you, like curing world hunger.
Okay, fine. I'll cure world hunger. So we got the rundown, and this week the rundown is sort of a recap of last year and sort of the rundowns idea of what next year may or may not look like. So what are your thoughts on what the Fed's pivot means and what it's going to look like going into early next year?
Well, you know that I've been more of a pivot guy and was wrong earlier than most people have. I think they're pivoting, and I think the Fed will be easing in March. The one thing I never liked was when the market was predicting 25 or 50 basis points of easing in 2024. That's just not reasonable. If the Fed's pushed to pivot, it's going to be pushed to pivot hard. So right now, the market pricing in 150 basis points of easing in 2024, that's more logical to me than a small amount, if that makes sense.
Yeah, and they started the rundown with a quote from Winston Churchill, which was, "Those who fail to learn from history are doomed to repeat it." I'm going to mangle another quote from Churchill where he said that the worst form of government is democracy, except for all the others. I'm going to mangle that a little bit and say that the best reason for the equity markets to go higher is a slew of Fed easings, except for all the others. And that's sort of the way I look at it, because when you look at a NASDAQ that's gone up about 53%, S&P, it's gone up about 24, a Dow about 13. I'm reading off the recap, by the way. And a Russell, it's up about 15%. It seems to me like the market did 2024's work in the last 2 months of 2023. Am I nuts for saying that?
No, I don't think you're nuts for saying that. And historically, and this is something that I believe I got from you, but historically, when the Fed pivots from tightening to easing, they try to be neutral. All of a sudden, something breaks. And generally speaking, the stock market has a relatively serious downdraft. It might be short-lived, but before the easing comes. So I think that's perfectly reasonable to think that the Fed is all of a sudden going to sit back, plan on not easing until they have to. And then all of a sudden, the equity markets may force their hand. At that point in time, I think it presents a good buying opportunity. But I don't think 2024 represents smooth sailing for stocks just because rates are going lower. And I think they're going lower.
All right. So last thing I want to ask you about this. In the rundown, they mentioned gold. Gold rose a little bit more than 12%, I believe. I might be wrong on that exact number. Could be 13%. But I had gold as my trade of the year for 2023, not necessarily because I thought it would outperform anything, but because I thought it was the best risk-adjusted asset. Now, they talk about gold being an inflation hedge, but it's an inflation hedge based on the old definition of inflation, which was the increase of the money supply, right? So that's what inflation used to mean. It didn't used to mean price increases. And can you kind of explain why that changed and what you think of gold and commodities in general going forward?
Because I think it is still somewhat linked to M2 money supply and profligate spending by governments and things like that. But there's other elements that is moving gold too. I think that the market has realized that the dollar index is no longer an effective view of what the dollar is, because it's just against other currencies with other central banks that are up to the same sort of nonsense. I think the fact that central banks around the world have been buying lots of gold, more so than they have in 75 years. And I'm not one of the crazy de-dollarization people, like the dollar is doomed, but I think there's people out there who are, and that's why I think they're buying gold. I think gold is a great play for 2024, and I'm going to be quite long. And if the futures settle above 2065 in the near term, I'm probably going to add to my long. And I think that here's the way it plays out to me. When the Treasury starts switching out to sell bonds on the long end, and if they start getting that lackluster response and demand like they had in a couple different auctions before, I think that's the trigger that could send gold considerably higher. Does that answer your question? I don't remember what your question was. Did that answer it?
No, it did answer it. And actually, I lied. I said that was the last question, but I got one more. Crypto's back.
Good.
You like Bitcoin or Ethereum for 2024? I'll go first. I like Ethereum.
I like Ethereum on the catch-up trade. Supposedly they have the better network. We are going to start talking about BlackRock's Ethereum ETF, which the SEC just said they would perhaps talk about in May. But I think that's going to be the next headline that pushes Ethereum. So I agree with you, Ethereum. I like both.
I like both too. And it's harder for a tyrannical government to ban Ethereum than it is to ban Bitcoin.
Exactly.
But Jim Iorio, Bob Icino. We have the Trader's Edge show on about 3 p.m. Eastern time live, and then catch the recordings. We'll see you.